Good evening everyone, and welcome to Admiral Markets webinar of 21st July 2014. Today I will show you 5 different setups and analysis from Euro Dollar, from GBP Dollar, from Aussie Dollar, Euro CAD and GBP AUD. So today we will have a lot to talk about and see potential setups on those pairs. Before I begin our risk disclaimer, then I will show you what happened last week. Total of 210 pips, something like that, could have been made. So we had 3 winner trades, 2 didn't qualify, and no losing trades. So let's see a disclaimer first. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get the corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. A risk disclosure statement stating all the possible risks associated with Forex market. By accepting the disclaimer, you're also proceeding further with me. And final part of risk disclaimer, Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business and this should not be taken as advice. It's a personal opinion only, and this webinar is for informational and educational purposes only. So, summary of last session recap of 14 July. So Euro Dollar 15 pips, not much, but at least we got something. GBP Dollar plus 120 pips with almost no drawdown. That was the single best trade of the week. Although Aussie Dollar, or how we call it, Aussie, it gave us 70 pips. But I need to say that GBP Dollar was even better because it reached the target and almost no drawdown. So trade of the week, GBP. Dollar CAD and AUD CAD didn't qualify for entry. So total of 205 pips pool. So for newcomers, and I see that you're coming in, every time I see more people coming in, which is a good thing. And that it also proves that I'm helping you a lot and I like it. As always, I am a pro trader, and all of my personal clients who I mentor can see my real account statement, and as a proof that everything is clear, everything is transparent. I never make up for anything, so everything is clear. If I have a losing trade, I will pause here, as always on our session recaps, but most of the times I don't remember that we had a single losing week on those setups. So basically it was really a good session. All of those session recaps have been good for us. So the problem is only when we over leverage, guys. So try to not use over leverage. If you were trading and if you've been trading with normal risk size, you know how I do it and how I teach people to do it. So never ever over leverage, because sometimes you may get 100 pips, and those 100 pips can be killed by a 10 pip loser. So don't do that. Trade of the week, as I'm telling you, GBP Dollar, and total of 205 pips pool. So anything between 10 and 205 pips pool couldn't be made. Okay, this was the maximum for all of these trades, and it was nice. Yeah, this is new setups for this week, but first I need to show you what happened during the last week. This was the alternative setup, which was qualified. First of all, this line represents our webinar time. So our webinar time was a little bit below this. It was something around this. So 7 o'clock platform time. This is platform time now, and today it's 6 o'clock my time. So this was the start of our webinar. And a couple of hours later, we could have made a nice short trade. But my short trade should have kicked in something around 36.40. And because it didn't happen, this was the high, and this was 36.28. I count only if the trade is within 10 pips, of the POC. In this case, the level which I post on those slides. So because this wasn't qualified as a potential trade, we can see the height was 36.28. It went in our direction, but soon alternative trade was qualified. It was a scalp swing at 35.60 with a 15 pip trailing stop. This was the level where we got in, and all of 20 pips could have been made, but because you were using 15 pip trailing stop, I think that we all have been stopped for 15 pip trailing profit. Okay, so this is 15 pips on euro dollar, rejection of the level which I put into PPT. GBP dollar trade, this was the single best trade. It was buy around 70.60 to 50, stop loss was 70.30, target was 71.80. So this is all copy paste from the slides, so I don't need to show you last week's slides. You have all of those webinars uploaded. If you have visited our webinars, then you know that I always post true information, and this was, all of these setups are taken from previous week's slides. No sound. Guys, can you please check the sound and tell me that you hear me? Because I have sound is okay. Oh, thanks God, because I wouldn't lie. It wouldn't be good if I talked in vain. So sound okay. Thank you. So Yves, please check your mic, or check your headset. So yeah, good. Yeah, where was I? Okay, 70.60 was our entry point, and I'm there. I was telling you that I never made anything after the fact. Everything I do, you all know that I do pre-fact, and all of those setups which are also glued to this chart are basically copy-paste from previous webinars. So this was where setup kick in. So this was the time of our webinar, and 4 hours later, basically at a London Open, we had a great trade. 70.60 was touched, as you can see in this example here. 70.60 was touched to the pip, and only one pip of a drawdown. This was really great, and you know that sometimes these trades really happen, and I like when those trades happen. Look at this bully candle momentum setup. Look at this. From our entry point, 130 pips. My target was a little bit below 71.90, it was 71.80. So basically this was hit, okay? Then Aussie, position sell 94.10. We've been selling 94.10 last two webinars. Now a question, do you place a buy stop? Yeah, I had a pending order at 70.60, and it was a little bit late that day, and when I woke up I saw that my trade was in profit, and that is what I like. When I go to sleep and sometimes my pendings are activated, and yeah, buy stop was that exactly, Yves. And I like when those things happen at London Open, because you know, when I live in currently the place where I live in is Serbia. It's a part of Western Europe, and my GMT offset is GMT +2 at the moment. And basically, when I wake up, it's usually something around 9 o'clock, maybe 8:45, 9 o'clock, and then I need to do the analysis. I usually need to scan all of those pairs and find the proper setup. Then I need to draw my Camarilla MACD levels and so on and so on. And then usually in between 9 and 10 o'clock I post those setups. And what happens is that particular morning I was a little bit late, but when I saw it coming my way, it was really great. And yeah, pending order was activated, and actually well, I didn't know that it will be hit so fast. So in 2 hours the target was hit. And when there is 10 pip buffer for trade setup, usually if I don't make pending order, this is particular trade when I make pending order. If I don't make pending order, then I use market order. And I already explained how I do it. Let's say that I didn't make a pending order here, just to explain. Okay, this is the time, let's say, when I woke up and I was following the price. So usually, let's say that my total risk is 0.5, okay, for example. Now, I see that the price is getting close to my entry zone, which was 70.60. When the price hits 70.70, I can open 0.3 or 0.2, okay? If the price gets to 70.60, I will open another 0.3, making it total of 0.50 trade. So I always, when I make market orders, I always pre-calculate my risk. If my risk is one lot, for example, I would enter at 70.70 0.5 and I would add 0.5 at 70.60, but my stop loss would be the same. I don't move my stop loss. I never move my stop loss. So basically, this is when you need to calculate your risk size. So if your full risk size is, let's say my risk size is 0.5 per trade. So if my one lot is 0.5 in this trade, I would enter 0.5 here, 0.5 there, making it total of, or maybe I would enter 0.3 or 0.70, just because at this point stop loss would be a little bit above 30 pips. So basically 0.30 and 0.70. So my risk size would be the same. That is when I make market orders. So 10 pip buffer for trade setup is when you make market orders. If you have pending orders, then it's okay to put all risk, let's say full lot size, of course, if you have a bigger account, of course. I never put one full lot at 10,000 account because that risk is 3% in a single trade. Now I won't be explaining risk management because I did a lot of webinars concerning risk management, and I will do another set of webinars because I constantly see a flow of new people, so I know that many people really have some problems with risk management. So basically you can enter part of in between those 10 pips and part of the trade when that level is hit. So now you understand how those orders work. And usually what it means is, let's say when I have two positions, as for GBP today, one position is the first primary position and the second position is alternative position. Alternative position is usually counter trend setup and first position is trend setup because primarily I trade within the trend, and the second alternative is counter trend setup. So usually I take only one. Whichever hits first, I take it. Okay, that is how it works. Now let me get back to Aussie. It was 94.10, 94.50, and 93.40 was basically set up. What happened is this was the time of webinar. So guys, whichever setup you have taken, it would be good. This candle, unfortunately, okay, this is 90. Yeah, it came within 10 pips, but I particularly did a buy order from there. So let's see, this was the time of our webinar. It was here. So it came within 10 pip buffer and basically it hit. Yeah, it hit this level. Yeah, I'm counting at a 70 pip trade. If you got in within those 10 pips from this level. But also this buy setup was great, because buy setup came to the pip without a single point of a drawdown. Whichever setup you have taken, it would be good, because it brought us a lot of money. How you handle your second TP target? Manually. Yes. My second TP target, I handle it manually by using trailing stop. If you don't know how I manage my trades, please refer to my webinar called how to turn scalp swing into intraday trades. I had that webinar with Admiral Markets, and it was the webinar how to manage basically a position from a scalp to a scalp swing, and from a scalp swing to intraday position. And if there are a couple of ways to do. You can place a trailing stop. After some pips, you can place your order to break even. If we have a momentum spike, then we usually place our stop below the first TP or at the first TP. There are a lot of money management methods, and I think in September I will do a special webinar about explaining all of those money management and trade management things, how I do it. So we will see. But for the moment, yeah, I can say I handle my second TP manually most of the time. So whichever setup you've taken, it would have been good. So great setup also in Aussie. And then we had dollar CAD and AUD CAD, which didn't qualify. They didn't qualify. It was buy around this level, but this was the time of our webinar. The price never pulled back down to our entry zone. And AUD CAD, same thing. Unfortunately, the price never pulled back where my entry zone was. This was the biggest pullback. It came 30 pip from our buffer, and of course I cannot take that into account. I was waiting for a bigger retracement. So that was the last week, so total of 205 pips, great. And now let's see for this week. This week. What that means is these setups are valid for today, tomorrow, and possibly day after tomorrow. What can happen is I can update some of those trades on my Admiral Markets blog, Twitter, and Facebook page. And of course, Forex Factory Spider's Den. By the way, just to remind you, I made a nice article because many traders have been asking me about which tools I use for trading, and I explained this trader. He asked me, his nickname is Bedesti, and he was asking me about the tools which I use. And that was the thing which I was also wanting to tell you. If you are Admiral Markets traders, I hope that you use these tools. They're free for real accounts. Use these tools to your advantage, especially correlation things and trade management tools, because they are really great and they work great in conjunction with the platform. I never experienced any lag with these kind of tools. So this what I was wanting to tell you this. So euro dollar, I have my pending order. I don't know if this target will be hit, if this zone will be hit, the level 35.75, stop loss 30 pips, target price 35.10. Now what can happen is now you probably was wondering why the market has been so slow this last couple of days. The thing is, market is waiting for AUD news, which will be in 5 GMT plus 2 time tomorrow. Then look at this. We have existing home sales, core CPI, but this will be stronger news. Then we have GBP news, very strong tomorrow on Wednesday. Then they will have again bank rate votes. Next thing, New Zealand official rate. bank rate, rate statement, CAD retail sales. Then on Thursday, we have retail sales, unemployment, new home sales, and what is most important for Euro, German flash manufacturing PMI. Again, New Zealand, a lot of strong news coming in, and the next week we will have ADP on Friday, NFP on Friday, and ADP on Wednesday. So, guys, market is very, very slow because it's been waiting for the news. Now, I will tell you a general advice, which is very logical. You need to trade. If you trade within the trend, now remember what I'm telling you. If you want to trade within the trend, you need to wait sometimes for these news, because if GBP momentum kicks in, main mover for a particular morning will be GBP. If you are Asian trader, this probably will be main mover for Asian session. So you always need to trade main movers. That is what I was. This is my trade. Forex Factory Spiders Den. If you guys don't know, I will show you also. But I need to tell you about this. I usually say main movers of the market, and those are the things which I also post on my Admiral Markets blog and so on. So you see, CAD pairs are the main movers today. It was posted on July 11th. And what happened after the analysis, basically the price went here and it got the momentum. So you need to know what main movers of the market are. So always pay attention to news. Wait, sometimes you can trade, of course, before the news. But then, if the news kick in, then usually some of those news will give you a necessary retracement for another leg up or down. Okay? So sometimes you need to wait for main market movers. I can say safely that I think the main mover for Euro will be, if this range doesn't break, it will be, of course, before German IFO business climate, it will be a German ZU, no ZU, flash manufacturing PMI. Yeah, this news. So 9:30 on Thursday. Until then, I don't know. Euro is very slow to trade, and we may get some movement tomorrow, but I really expect this range to break. At least I want to see 35.75. Spiders then is my thread. You just go on Forex Factory. You click on Forex Factory. Then you can go on forums. Then you can go trade and discussion. And if you press replies, this is Spiders then. But I think it has more than 3,200,000 visits so far. So yeah, this also Admiral Markets blog. Check always those setups, because I'm trading 24 pairs, and all of those pairs which I'm trading, I will give you setups, course. So let us get back, guys. We made a slight digression from this. So this is the first thing I'm waiting for. 35.75. I have my pending set. I don't know if it will be hit, but this is what I'm waiting. If it doesn't happen, it doesn't happen. Well, we can move on. For GBP dollar, I see it's in uptrend, but this is retracement. If you remember, I told you it will be a deeper retracement in GBP dollar, possibly a deeper retracement. So yeah, our level was hit last week, but then it was the time for deeper retracement. 71.00 stop loss 30 pips if the price kicks in. 70.30 is the target, and 69.80 is second target. If the price gets to 69.80, I will be looking to buy a 69.80 with a trailing stop of 20 pips. Okay, I will be looking to buy it, but only if it gets down to 69.80. I am not buying at the moment. Again, it's a bit of range here, and if you zoom into 1 hour chart, you can see this was basically the low. This is the high. Now, what happened after this? This is where deep retracement has started. So we need to take swings into account. Higher high, lower low, lower high, lower low, lower low again, lower high, lower low. This was a little bit higher, but the price closed below the level. So again, lower high, lower low. So if we get a second chance trade around this region, I would be looking to sell it and then bang to 70.10, 69.80, 70.30, sorry, and 69.80, whichever gets first, I will be trading it. Yeah, if this trigger kicks in first before this, I will not buy. But if I don't get this set up, I will wait and buy it here at 69.80. Guys, I think that this is a very sure trade. It can be a scalp trade, but you can turn that trade to scalp swing because I'm seeing it there. Look at this. If this level we have, you're welcome, no problem. This is the level where we have, where we can see historical buyers. So near-term buyers, historical buyers. Look at this, breakout of this level, a retest of this level. Then historical buying, historical buying, historical buying, buying. After many buying, it's normal, it's pure price action. This level is protected, and I'm 90% sure that if the price gets here, we can try to go for scalp swing trade at least. So trading stop 20 pips, and we will see 69.80. Aussie downtrend ranging. I only see breakout trades, and I will tell you why. Breakout pullback continuation below 93.30, target price 92.70. Breakout pullback continuation 94.10, 94.50 is TP. Now, let us check the calendar. The calendar for Aussie saying today, possible breakout will come at 5 GMT plus 2 because RBA Governor Stevens will speak. Okay, so Reserve Bank of Australia chairman will speak. That will probably, I don't know for sure, but I'm waiting for a breakout of these two levels. This is the main level to the short side, and this is the main level to the long side. Look how those levels are protected. The price has been in the range for a long time, and only if the price breaks out of this level, a retest, I will buy it, and if it breaks below this level and retest, I will sell it. Okay, so you know what breakout pullback continuation is. This is the level. This is breakout. This is pullback. You can also enter here. And continuation trade is 2 pips above breakout point. The same thing is for shorts. Breakout, pullback. So this is retest, breakout. You can sell here, but you can also wait for continuation, which will kick in 2 pips below breakout point. So basically, this is breakout, pullback, continuations, buying, selling. So this is what I'm waiting for Aussie. EuroCAD sell around 45.50, stop loss 45.70, potential target 44.80, good risk to reward. Let's see. EuroCAD. This is what I'm counting in. This is obviously strong downtrend. Look at this. We have multiple of trend lines. So basically, what I think is if the price gets me to the level, I will sell it. Unfortunately, if the webinar happened a couple of hours ago, I would tell you to sell it here because this is the level what I was waiting for, and I'm waiting for second chance pullback. 45.50 stop loss, only 20 pips. 44.80 possible target, because this is what I'm counting in another, if it happens. Unfortunately, the price is already getting down but if we get a nice, I don't know, jump again, I will be looking to sell it and placing my stop loss 10 pips above this level. So I'm waiting for this really, and we will see if it happens. Then we have GBP AUD set up 82.50. If you remember my setup from Friday, GBP CAD and GBP AUD analysis. Basically, this trade was good for 25-30 pips, and GBP AUD, I think, let me see. Yeah, I think it was good for 15 pips before it made another leg to the upside, but it was rejected from this region. And GBP AUD is basically rejecting it again. I can see. Let me check GBP AUD. Yeah, it's been rejecting nicely from this level. The same, almost the same setup is for GBP CAD, was for GBP CAD. Now, I'm waiting for a little bit more of a pullback on GBP AUD. Because what can happen? Yeah, the price indeed was rejected many times at this zone. So if you've been scalping from this region, you could have made 30-40 pips just by scalping rejections. Now, if the price makes another attempt, I think this will be this trend line will be broken. So I'm counting a little bit of more of a pullback, GBP AUD. You can see it here. This is important level. But if this level breaks out, because essentially this looks like a potential breakout. This is not a perfect triangle setup. But if you watch this is a flat top ascending triangle, and this is bullish. So if this breaks out to the upside, I would be waiting for another level to sell, which will effectively be something around 80 to 45.50, this region. Okay, so this is potential. This is flat top ascending triangle. And if this breaks to the upside, I will be selling here. I think we might see another nice sell. And of course, 82 will be final target. But as always, I'm advising you to use trailing stop. Buy scalp is the alternative trade if the price goes down, 81.60 with 15 pip trailing stop. If the price goes to 81.60, that will be a level for a potential buy trade. Double bottom here, okay? So probably this level is protected, and I'm counting that level is protected. So I will be buying here for a swing scalp, but I will be selling for a trailing stop, possible intraday setup. Okay? Now, if you have any questions, do not hesitate to ask me. This is what I have for you today. I will go through these slides again, so you can also put it on your charts. And as always, follow my analysis on Admiral Markets blog, also on Forex Factory, on Facebook. Yeah, Facebook, basically, this is what I post on Twitter. It's also posted on my Facebook. So basically, Spiders Den, Admiral Markets blog, and Twitter, and of course, sign in for premium webinar, MTF MACD indicator presentation. I will give you multiple time frame MACD indicator along with another indicator which is used with MACD and I will show you how to scalp hourly candles with MTF MACD indicator. That scalping system is also good because it utilizes multiple time frame MACD with conjunctions on a lower time frame. So basically, sign in and you will receive the indicator, which is very useful, and a free strategy for you, for premium members, live accounts only. Question, Emila is asking, any setup for GBPN? I was thinking a lot about GBPN. Let me put it on my chart. I don't see nothing here. Look at this. This was a big drop. It can go down, but the thing is, I don't see anything on GBPN at the moment. This is a very rangy price action. And look how the price is making a triangular form. The only thing you can do, Amila, for GBPN is wait for a breakout retest trade. So you can go for a breakout retest or breakout here, and this price should break out soon. So I'm not sure what can happen on GBPN. That is why I was watching all of those pairs before I made setups, and I'm trying to always to show you the biggest possibility setups. Okay. Bob is thanking me. Bob, thank you, Bob. You're welcome, of course. No problem at all. Dollar yen. Let us see dollar yen. Yeah, dollar yen is the pair which is heavily dependent on dollar news, and I think that dollar yen will get some momentum, possibly tomorrow, but probably the biggest momentum will kick in at FOMC statement, July 30th, in 9 days. So dollar yen can be traded also before the news, but usually those news move the price, but not for much time. Kiwi is pulling back nicely. Yeah. Now, Bob from New Zealand. Yeah, I don't know if Bob is from New Zealand, but basically this was a comment for our trader, from our trader. The name Murtaza, Bob from New Zealand, hello. So Nazam Murtaza is saying hello to Bob from New Zealand. So, okay. UK. Yeah, so, no, Bob is not from New Zealand. Bob is from UK. I presume Mr. Bob was from UK because the last name is Shepherd, and that is well-known last name in UK. So, and he's saying hello to Murtaza. So, good. Our traders are getting known to each other. So, it's a good thing. Okay, dollar yen. I don't want to trade nothing here. I don't want to trade on dollar yen because market is waiting for those momentum to kick in, and you know that it's been heavily influenced by news. If you remember NFP last time, the price really spiked up, and then the downtrend started. So basically dollar yen is in downtrend, but I don't see any particular good setup on dollar yen. It's very, very slow, and again, it's a sort of triangle, and that triangle is congestion triangle. Now let me explain you what congestion triangle is. When you see the price makes a high and a low, Marty is asking me for my email. Yeah, my email is tarantulafx@gmail.com. Sorry, tarantulafx@gmail.com. So this is my email. So feel free to write me. When you see a one high, which is very prominent, and if you see a low, which is also very, very prominent, you need to identify by basically swing. This is swing high and swing low. You also have a pin to the upside and pin to the downside. And now look at this perfect congestion triangle. The price is trapped within the triangle. Look at this. And now when it gets to the vortex or pinnacle of the triangle, we expect a pullback. So basically the same setup is with GBPN. You're welcome, Marty. So GBPN is having the same setup. Basically, I don't like to trade these kind of things because they are dependent on momentum trades. So momentum trades are only valid after the news. So some of those news will push the price above or pull the price below these triangular trend lines. So because of that, I don't recommend taking any setups on these pairs. It's very simple. The best trades are always done within the trend, because the trend is giving you the opportunity to go for a full price, or once you're in, to safely trail the price. Counter trend setups. You remember my counter trend setup for euro dollar? 35, 20, 35, 25 buy trades. Most of those counter trend setups are risky, but sometimes they are the earliest entry possible. So counter trend trades are the earliest entry possible, but those are a little bit riskier than trend trades. So basically, the same thing is with triangles. You can trade the triangle. Let me see, this was the system which I was presenting on one of our webinars before. Let me switch to, dollar yen. So triangles are traded like breakout, retest, or breakout, pullback, continuation. But they're not very reliable. Better is to trade, I can see this was much better to trade. This is called a rising wedge, and rising wedge is much better to trade. Look at this, guys. A rising wedge on dollar yen, and at this point it broke up. So rising wedge is better to trade than triangle. Rising wedge is bearish, falling wedge is bullish. So it's always better to trade these kind of things. Also, look at this. This is flat top ascending triangle. Flat top ascending is much easily traded than normal triangles, because the flat top, this is flat top, this is ascending. So flat top ascending triangle is bullish pattern, so you only go for a bullish breakout. If the price goes below this, you don't trade it. So when the price breaks out of flat top, you are going for breakout, pullback, continuation, breakout, retest trade, and this was how it happened. So flat top ascending and flat bottom descending, or those kind of triangles, are easily traded. Now the question, Nenad, I read in a PDF from Admiral about a correlation matrix that is the best to minimize the correlation between the pairs. But we can use strong correlation as well. Yes, you can use the strong correlation. But, Yves, have in mind that if you use correlation, you will be sometimes double exposed to a single currency. I will answer, because the similar question is presented by Badasti. Yeah, that was his name. I will show you Badasti. Question. Here. Hey, Dragan is thanking me. Thank you. I will answer this. So, look at this example. This is correlation matrix. Okay? Yeah, I will explain you also, so no problem. So, euro dollar, particularly no correlation, but look at this. GBP dollar and GBP Swissy. Basically, you will be double exposed to GBP currency pair if you trade this. So if you want to trade GBP, you can pick in between GBP dollar, GBP Swissy. If you can make double trade, but effectively you will be double exposed to GBP. So you can try some other correlated pairs. So let's see. GBP dollar is negatively correlated with AUD CAD and dollar yen. So if you trade GBP dollar with, let's say, AUD CAD, you won't be double exposed to GBP currency, but you can go long on GBP AUD and short on dollar CAD, because they're moving in opposite direction. There are many of those examples. So let's say Aussie is making a nice correlation with AUD CAD. Yeah, positive. So basically you will be double exposed to the currency pair. You can trade it. It's okay. But always have in mind the risk. But if you're trading Aussie with dollar yen, basically it's not the same exposure, because AUD, Australian dollar, is the primary currency pair here. So you won't be double exposed to any of those pairs if you trade, let's say, Aussie with dollar yen. dollar is the primary, Japanese yen is secondary currency. Here AUD is the primary, dollar is secondary. So basically you can go long on AUD and short on dollar yen. So that is how it goes. I think it's clear, but if it's not clear, I will also explain on Forex Factory, answering the question. Yeah, cool, thank you. No problem, you're welcome. So that is how it goes. So guys, let me show you all of those slides again, and if you have any question, again, you can ask me. If everything is clear, of course, sign in for many new webinars which will come. I will be having a vacation from in August. So basically, yeah, I think I won't be, yeah, Friday is the 1st August, and basically I will be here on the Friday, till Friday, and then I will be back soon, something around 18th of August, so I'll be there with you. The question, Andrews, where can I find correlation matrix? You can find correlation matrix on Admiral Market platform. You just need to, if you have a real account, even if you have demo account, it will work for 30 days. If you have a real account, then you can basically install it, and they will be put, all of those indicators, it's called Supreme AM Edition, they will be put in Expert Advisor automatically. So all of these Expert Advisors are the form of Supreme MT4, and you can download it from Admiral Markets website, but demo account is limited to 30 days, and real account have unlimited usage of those, and those are free for all users, so those are great. So euro dollar cable, Aussie, Euro CAD, and GBP. So use correlation matrix also if you trade multiple pairs. Watch for possible updates on these pairs, possibly tomorrow. And of course, I will be posting new pairs tomorrow, new setups, new analysis. And I hope that we will have a great week as always. If you don't have any further questions, I can assume that everything is clear, and we can call it a day today. And basically, yeah, thank you all. Thank you. So thank you for listening to me. Thank you everyone for great comments and for paying attention to these setups. As you know, I want you to make money. I want you to make profits. Forex is market where we strive to make profits, and that is achievable. So thank you all, guys. Thank you, and I will see you very, very soon. Cheers and bye for now.